Hello traders and welcome to another video review. Today is Tuesday, May 16th, 2023. Let's find out what's going on the Forex calendar today. What do you see here are very important data releases overnight and during the next 24 hours. So what do we have here? RBA meeting minutes, Reserve Bank of Australia. We are going to take a look at the Australian dollar at the beginning of our technical part. Industrial production from China, way below the expectations. 5.6% was the actual reading, while the forecast was 10.9, which is still better than the previous reading of 3.9. That's another reason to take a look at the Australian dollar. Average earning index and bonus is in line with the expectations of 5.8% in the UK, and Claimant count change is better than expected. 46,000 actual reading versus the forecast of 31,000 and the previous reading of 26,000. We are still waiting for the German data. Economic sentiment is scheduled for release at 11 o'clock. During the New York session, we have the core retail sales and retail sales data from the US, as you can see, scheduled for release at 2:30, together with the core CPI from the Canada and the ECB President Lagarde speech at 4 p.m. There's still a Eurogroup meeting in the Eurozone. So, what do we have here? Pretty intense day, pretty busy day on the financial markets. Let's start with the Australian dollar and then we will see what is going on the other markets. Daily. For our chart of the Australian dollar looks kind of bearish, because what do we have here is the local high made at the level of 6,712. As you can see, we reverse from this level. Let me just find out where is the low. There you go. 6,639 is the intraday technical support and the low of the previous high. And the low of the previous swing down, of course. Twisted top, bullish engulfing patterns around the level of 6,800. There you go, 6,820. That's the first technical resistance, and then there is another one located around here, 6,809. So this is very important supply zone for the bears. They will defend it like no tomorrow, because any breakout higher would mean that this market is starting to trend to the upside. Okay, so what do we have here? It looks like a 5-wave decline. Then we have the potential wave B to the upside, or a part of the wave B. Nevertheless, it looks like if the local technical support, this one is of course violated, we will definitely put to the test this low, 6,576. That's the low from the 28th of the April, and this is the technical support for the bulls. As you can see, we can place like a line here that was violated already after this breakout to the downside. The market is trading right now below the level of the 150 periods moving average, so that's another bearish indication. And the market on the RSI, the momentum reversed from the level of 50 right now, sharply reversing to the downside, so the bulls cannot even break back into the positive territory in order to extend the rally. Very sharp reversal on the level of 50, and it looks like the bears are in charge of the market, and lower prices should be expected soon. So that's the Australian dollar to the American dollar. We are now going to take a look at the New Zealand dollar. Very similar situation. Local high and in the same technical resistance. There you go, 6,400. You go, that's the one. The other one, 6,376, 6,380. Very narrow zone of the technical resistance. Again, trend line can be placed here, broken, very dramatically broken, and the market went down towards the extremely oversold conditions on the 4-hour chart. We are trading below 50 and 100 periods moving average. Recent technical support, let me place it for you guys. The technical support is around 6,177. Maybe this kind of a level is being taken into the account. The movement to the upside was a very narrow. There's like a 38% of the Fibonacci retracement, and then as you can see, momentum again rejected from the level of 47, now pointing sharply to the downside. It looks like we will have another movement to the downside in the coming days. Horizontal line can be placed on the 6,106 because that might be the key short-term technical support level after that low from the 27th of the April 2023. So situation very similar on the New Zealand dollar market. It looks like the bears are still pushing the market lower. So again, this might be impulsive wave to the downside, wave A. This might be a completed wave B correction or a part of the wave B. It depends how this one will develop. However, any impulsive breakout to the outside of this zone and below the technical support will be considered as the wave, at least C, impulsive wave C to the downside. Okay, targeting of course the technical support. So please keep an eye on this situation here on the New Zealand dollar, and keep an eye on the Australian dollar. They look very toppy. What else should we take a look at? The British pound. Why? Because there are some data from the British pound labor market, and this situation is very similar to the previous markets. Please take a look first at the momentum. We hit 49.33 and then reversed sharply. So this level here 1.2539 will act as the technical resistance, intraday technical resistance. So far the market must break above this level in order to continue the up move. No avail so far. Okay, the technical support 1.2334, so let's make it green. The other technical support is located, of course, one swing lower, then one swing lower, then one swing lower. So there's plenty of the technical supports, but the most important ones are 1.2343 and 1.2350. So this is the technical support at the very bottom. Again, this looks like very impulsive wave, corrective wave to the downside. So that's the wave A. This wave B is either completed or it's about to be completed, and then we need the wave C to the downside to be of course to be developed very soon. Let me just take the screenshot, and in that situation the target is of course at the bottom of this whole range, around 1.2343. So if you see it here, right, just take a look how many days. Let me just put an indicator for it, how many days it took to move in that direction. I think that the price and range, date and price, and there you go. Let's say that low. Okay, from that low to this high, this is 131 days. 131 bars, 29 days and 20 hours, 2.71 to the upside. Okay, on plus for the bulls. And now it took only from that high to that low, let's say it's not even the bottom of the range, from that high to that low, it took only let me just get rid of one of this, 4 days to bring the market down minus 1.85% in 4 days and 4.5 days apparently. There you go. That's 1/6 of this time. So pressure is great on the British pound. Pressure is very intense. The bulls don't even have a chance to break back into the positive territory. Once they broke towards the very extreme market conditions levels below the level of 30, the low here is 29.05, they don't have enough momentum to bring it back somewhere. So we are trading below 50 and 100 periods moving average, and it looks like we are going to stay like this. What's the reason for all of that behavior? Maybe we should take a look at the end at the US dollar index. US dollar index is apparently looking very bullish. This looks like a bottoming pattern, bottoming cycle, and we might see very soon another spike, another rally for the US dollar. The nearest technical resistance is from the 10th of the April, 102.75. It was almost hit, right, but we got this doji here, so market went a little bit lower. Right now the market participants are testing the level of 102.37, so that's the technical support. As long as we trade in that narrow zone, the outlook remains bullish. However, we can still move as low as the level of 1.01 and 81 before the up move will be continued. Please take a notice here, take a look here. 100 periods moving average crossing 550 periods moving average on the 4-hour chart, bullish indication. Market is coming off from the extremely overbought market conditions. As you can see, the RSI is 59-60 points right now, still strong. There is still some pressure, but when we get here, the market participants might start to buy it back, and then of course cause another rally in the US dollar index. Great opportunity for them. If they will not use it, then it might backfire on them, because the market will drop significantly as the rally attempt might fail. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. So take care and bye bye.